All right, so in this video, I'm going to be going over, can you use smart money concepts in large caps or trading options? So to answer that question, yes, you can use smart money concepts in options. And actually, you can use smart money concepts in every single market that trades. You can use smart, because I know most people, most people that trade smart money concepts, it's either in futures or it's in Forex. You usually don't see anything outside of that from what I've seen on Twitter. But yes, you can use smart money concepts in small caps. You can use it in large caps. You can use it in even crypto. Every market that trades, you can use smart money concepts. So in today's example, I'm just going to be showing large caps. I'm going to use NVIDIA. I actually paper traded NVIDIA today, and I'm going to break down what I saw. So what made me bearish on this, what made me buy puts, where I bought puts. We're going to break down everything. All right, so you might be wondering, what's this block? What's this? What's that? Let's start from the 15-minute chart first. Now, right off the bat, I know a lot of you already know what this is. At first glance, you know what that is. It's what? It's a fair value gap. It's an imbalance in price. So, on this large leg down right here, that created a fair value gap. Remember, 3 candles. 1, 2, 3. 3 candles make the fair value gap. 1, 2, 3. 3 candles make that imbalance, that fair value gap. See how it didn't get tested in here? See how it's nothing but candle? That's a straight up imbalance right there. See that? So we got this bearish fair value gap that was created on that huge surge lower at the bell. Price does what then? It trades down lower. It purges this sell side liquidity, aka pre-market lows, yesterday's lows. What's underneath both of those levels? Sell stops. It does what? Purges those sell stops. So price is in what now? After it purges these sell stops, this sell side liquidity, it is in what? It's in a short-term discount. So now that it purged those sell stops, it's in a discount market. We don't want to be shorting in a discount market, right? We don't want to be shorting after it takes out that sell side liquidity. Nah, that's not what we want to do. We don't want to buy puts or short weakness. You know, we want to wait on a rally higher. We want to short into strength. We want to buy puts into strength, right? So price does what? It purges that sell side. It starts to curl back up into our imbalance. See that imbalance right there? Price curls back up into that fair value gap, aka our imbalance. This is when I became interested. Now, for me personally, I didn't just start buying puts, or you don't want to just start shorting as soon as it goes up into that imbalance. Sure, you can use your lower time frame confirmation. Did I? In this case, I didn't, but you can. That's up to you. I didn't go down to the 5 minute, the 1 minute, look for that shift in structure. I know some of you might be lost by that, but if you're keeping up with ICT's mentorship, you know exactly what I'm talking about. I didn't look for that on this. I didn't need to, and I'm about to tell you why I didn't look for that and why I was confident going in with buying puts into this strength, essentially. So there's a couple reasons why. So we've already established, we got our fair value gap, our imbalance, we purged that sell side, we're now curling up. But before I buy puts, I want to make sure this is in what? I need to make sure it's in a premium market, right? So what we do for a premium market, you take the high of this large surge higher. Where did it originate from? Where did this huge move, where did that originate from? Right here, boom. high to low. What's a premium market? A premium market is above 50% equilibrium. There's 50%. It does what? It trades above that 50% equilibrium price point. That is a premium market. We're now in a premium market up here. It's traded up into a premium market, up into our fair value gap, our imbalance. Now we can begin hunting. We can begin hunting for puts or short setups if you're trading shares. So this is kind of outside of the smart money concepts part of it, but what made me pull the trigger on this? 164, whole number resistance. Okay, what you need to know about your whole number levels is they are strictly psychological levels. Same with the half dollar, same with every 25 cents being natural levels. The whole number though is your strongest psychological level of resistance. So, but you don't want to just go in and buy every whole number. I mean, go in and short every whole number resistance levels or buy puts into every whole number resistance. It's only powerful when combined with other aspects. What are those aspects? Well, what we've already went over. We got our imbalance right here. See that big imbalance? When I say imbalance, I mean our fair value gap. 1, 2, 3, fair value gap right there. It trades up into it. Okay, that's one thing. That's one aspect of it, just one. But also, it's in a premium. We've already went over that. It trades up into a premium market above 50%. Equilibrium is a premium market. Boom, it does that. Now, whole number resistance. That's yet another piece of the puzzle. Whole number resistance, our strongest psychological level of resistance. And a few other things. Well, it didn't quite hit this short-term low right here. That was a level of resistance as well. It just barely missed it, but you do have one right here. See that? So I'm going to plot it on there. This short-term low broken becomes resistance. See that swing low right there? Broken with that fair value gap created. It becomes resistance. Right there. See that? So, yeah, I bought puts as it was coming up into 164. So that was the reason, my reasoning for why I was bearish on NVIDIA. That's my reason for why I bought puts on NVIDIA. Now, where was my PT? That's the next part. Where was my PT? Where was my stop? Now for this, I did go down to a lower time frame. For my entry, I didn't take the 5 minute. My entry was just on the 15 minute, but on the 5 minute, here's what you're gonna do. Take your Fibonacci again. From the low after we purged that sell side liquidity to the high, same deal. 50% is where it's right here. All right. So you could be aggressive. Now I didn't, let me see. Yeah, just barely. So I took profits just barely above that 50% equilibrium. You could hold for below it. But here's why I took profits where I did. So I want you to, all right, so remember, we bought puts up into 164, right? I want you to look through here. What do you see? Think smart money concepts. What do you see down in here around that 50% equilibrium price point? Here, let me clear this off real quick. Because we've already established what we were doing there. Right here. What do you notice? 1, 2, 3. What do we got in there? We have an imbalance, a fair value gap. So price is going to be drawn. It's going to be drawn to fill that imbalance. Okay? So remember, overall we're bearish. 164 was where that's where the entry was. My PT, you want your PT to be below or around that 50% equilibrium point. Like I said, I didn't take profits below it, but it was around that 50% equilibrium. I always, now this is outside of the smart money concepts, but if I'm buying puts and I'm shorting, well, I don't short large cap, so buying puts, I want my PT to be below VWAP. And then if I'm buying, PT is above VWAP. But look right here. There's your fair value gap. That's your PT inside that fair value gap. Now, I waited for the one, my PT was 162. You could have took it as soon as it traded down into it right here, because you can see it did trade down into that fair value gap right here. Played around with VWAP, bounced off VWAP. So I had to sit through this little bounce right here, but I held on to it, and then I ended up hitting my PT right here at 162. What is 162? 162 is whole number support. So again, combining everything, the fact that we're getting close to a discount, a short-term discount, we had this fair value gap in here, and the whole number. And also, you might notice this line right here. What is that? That's just yesterday's lows. All right. So that's why this imbalance right here, that I knew price was going to be drawn to fill in that. I knew it was going to be drawn to do that, and it did. So one more time to make sure it sticks with everyone. One more time. Why was I bearish? See this big surge right here. There's your fair value gap. Remember, 1, 2, 3. Does what? There's your imbalance. Draw it in there. It does what? After it purges this sell side liquidity, aka we're in a short-term discount, rallies up higher into that fair value gap. Test what resistance? Whole number resistance, 164. You also got this short-term low, support turned resistance. Right there, boom, test that. That is my signal to buy puts. What's my PT? We want to get our PT below 50% or around it. From the low to the high of that rally, 50%. Look in that area. What do we got? We got an imbalance in here. That's the draw on liquidity right there. Boom. That's what I was shooting for. And also, I went with 162 because that's the whole number. Okay, it just gives it a really clean level to shoot for. Not something random like, 162.28 or 162.52. It's a really clean level being the whole number. Now you might see 163 and wonder, why didn't you just take profits there? Why don't you bought puts in the 164, why not take profits in the 163? Well, that's up into a premium still. And like I just told you, you want to shoot for your you want your PTs to be below that 50% equilibrium or near that 50% equilibrium. And you also want to look for the imbalances where the sell stops are at. And we had an imbalance in here, right here. See that? So it really wouldn't make any sense. It wouldn't make any sense to take profits up here when I know price is going to be drawn to fill in this. And so, yep, that was NVIDIA. I saw another. AMD looked really good today as well. I didn't hit this because I was already messing with NVIDIA, so I just passed on this. But pretty much this is basically the same deal as NVIDIA, same type of play. Go to your 15-minute. What do you notice? Same exact thing. There's your imbalance. Right there. I mean, it doesn't get much cleaner. There's your 1, 2, 3. Fair value gap. Trades up into the fair value gap. You didn't hit your whole number. You did have a psychological level in there still, being 83.50, $half resistance. So trading up into your imbalance, your fair value gap, $half resistance. Yesterday's lows is right here as well. What happened? It ended up selling off. So I just want to make this video to kind of clear that up for some of the people that are newer to smart money concepts. You can absolutely use this in large caps. So don't just be stuck to one market just because that's what ICT does. He does futures, he does Forex, but I promise you this stuff, it works in large caps and it also works in small caps as well. Like I said, I kill it using these concepts in small caps all the time. Okay. I don't trade crypto, but I know people that that do trade crypto. They say the same thing. It works in crypto too. Any market that trades, I'm telling you, any market that trades, you can use smart money concepts in that market. So hopefully you found this video useful. If you did, make sure you hit that like button, you subscribe to the channel. And also, if you want to join, if you're not yet, if you want to join my free Discord chat room, the link to that is in the description. If you want to join my premium chat room, where I do live commentary every single day, advanced video lessons, that's in the video description as well.